please press star 1 on your telephone keypad. If you wish to withdraw your question, simply press star 1 again. Anil Gupta, Vice President, Investor Relations, you may begin your conference.
Good afternoon and welcome to the Coinbase first quarter 2024 earnings call.
I am Delta.
Joining me on today's call are Brian Armstrong, co-founder and CEO, Emily Choi, President and COO, Alicia Haas, CFO, and Paul Graywall, Chief Legal Officer. I hope you've all had the opportunity to read our shareholder letter, which was published on our investor relations website earlier today. Before we get started, I'd like to remind you that during today's call, we may make forward-looking statements. Actual results may vary materially from today's statements. Information concerning risks, uncertainties, and other factors that could cause these results to differ is included in our SEC filings. Our discussion today will also include references to certain non-GAAP financial measures. Reconciliations to the most directly comparable GAAP financial measures are provided in the shareholder letter on our investor relations website. Non-GAAP financial measures should be considered in addition to, not as a substitute for, GAAP measures. We are once again using the Say Technologies platform to enable our shareholders to ask questions. And in addition, we will take some live questions from our research analysts. With that, I'll turn it over to Brian for opening comments.
Thanks, Anil. Q1 was a very strong quarter. We generated more adjusted EBITDA than we did all of last year. Keeping our cost structure low while continuing to innovate is really paying off. To kick off today's call, I wanted to provide a progress update on the 2024 priorities that I shared on our Q4 call. As a refresher, they are first, driving revenue. We're doing this through improvements to our core simple trading experience, growth in stablecoins, winning in the derivative space both in the US and abroad, and driving international growth by investing in key markets. Second, we're driving utility in crypto. We're doing this through Base, our low-cost Layer 2 solution, and building a better payments experience on crypto rails. And third, we're driving regulatory clarity. We're doing this through the courts, through collaboration with policymakers around the world to pass sensible rules, and most importantly, through activating the crypto voter base to elect pro-crypto candidates in this upcoming election. Let's start with driving revenue. In Q1, we capitalized on strong market conditions, and we saw many of our investments through this last downturn begin to pay off. Our institutional business continued to see meaningful growth, in part driven by the excitement around Bitcoin ETFs, which drove new customer adoption across our product suite. Coinbase Prime reached all-time highs in trading volume and active clients, and nearly 40% of our clients engaged with 3 or more products in Q1. Turning to derivatives, both Coinbase Financial Markets and Coinbase International Exchange have shown promising growth in their early stages. In Q1, Coinbase International Exchange added 15 new perpetual future listings. We've also increased the position limits across both products. USDC market cap increased over 30% year to date and is growing faster than major competitors. We see higher engagement from customers who hold USDC balances on our platform, so we've been investing in growing those platforms' balances by unifying order books on advanced trading and offering competitive rewards. And while it's still early days, we're also seeing great traction with Coinbase One, our consumer subscription product, which surpassed 400,000 paid subscribers in Q1. Next, let's move on to utility. I'd like to spotlight our Layer 2 solution, Base. As a reminder, Layer 2 solutions help blockchains scale, similar to when the internet moved from dial-up to broadband. And we believe this scaling will drive many new use cases in the crypto economy. Base has helped dramatically reduce transaction fees and confirmation times, getting us closer to our goal of having the average crypto transaction take less than 1 second and cost less than 1 cent anywhere in the world. Developer activity on Base increased 8-fold in Q1. In the last 30 days, Base has processed over 2 times as many transactions as the entire Ethereum network on Layer 1. Base is now the #1 Layer 2 solution by number of transactions processed, a huge accomplishment. We've made Base faster and cheaper to use with fee reduction by about 80% through protocol upgrades, and our fees are now often below 1 cent. We're also integrating USDC on Base across Coinbase products, creating nearly free instant global payments in a USD-denominated asset. This is a really, really big deal, because we now have direct line of sight to update the global financial system by reducing the billions in payment fees paid by consumers and businesses each year. Finally, let's discuss regulatory clarity. Coinbase continues to invest heavily in driving clear rules and regulations around the world for crypto, and we're actively contributing to advancing pro-crypto candidates during this major election year. We're a large contributor to pro-crypto organizations like Fairshake Super PAC, which already had a great impact in the March primaries in California, Texas, and Alabama. We also continue to work with grassroots advocacy organizations like standwithcrypto.org, which now has over 400,000 crypto advocates who've raised their hand indicating they want to elect pro-crypto candidates in November. We're also making steady progress in getting clarity through the courts in our litigation with the SEC. In Q1, the court ruled on our motion to dismiss, dismissing the SEC's claim regarding Coinbase Wallet, which was a significant win for self-custodial wallets across the industry. This win provided clarity for us and developers to continue to drive our on-chain product growth, which we believe is an important element to fulfilling our mission of increasing economic freedom. The court denied the rest.
I'm just going to interrupt here and say, if you're watching this, I read the shareholders letter and my forecast was spot on, 1.6 billion. I just made this visual of the actual numbers they reported in their shareholders letter right here. And, 1.6, so nailed it. Their net income is actually higher because they got more tax benefit and they started counting their gains on crypto, which is huge. So earnings per share were 1.65. Market was expecting 50 cents. So it's better than 3 times. So this is huge. Let's go back to Brian talking. Just crushed it.
Total revenue grew 72% quarter over quarter to $1.6 billion. We generated $1.2 billion in net income, and adjusted EBITDA was $1 billion. As Brian said, more than we generated in all of 2023. We ended Q1 with a strong liquidity position, including $7.1 billion in USD resources. And equally, if not more importantly, our customer safeguarded assets grew to $330 billion. We are proud to safely store over 12% of total crypto market cap on our platform. These results reflect our focused execution on product expansion, our ongoing operational discipline, and strong crypto market conditions. Looking at transaction revenue grew 103% quarter over quarter to $1.1 billion. This is driven by higher crypto asset volatility, as well as crypto asset prices, which both increased sharply in March. On the consumer side, trading volume growth was strong across both simple and advanced, resulting in our consumer blended average fee being roughly flat quarter over quarter. We saw higher engagement from users acquired in 2023 and prior, as well as new user growth. We also gained market share in spot trading on both the consumer and institutional trading platforms. Brian shared earlier in his opening comments, but Coinbase Prime trading saw their all-time highs in the first quarter. I want to share that in the first quarter, we broke out other transaction revenue, which consists of revenue from base sequencer fees and payment-related revenue. These revenues were previously included in consumer transaction revenue. Our goal is to drive utility and experiment with payments, and this new revenue transparency helps provide investors insight into that ambition. Our subscription and services revenue grew 36% quarter over quarter to $511 million. This growth was driven by higher crypto asset prices and native unit growth. I'd like to call out that the price of Ethereum was 60% higher when comparing March 31st to December 31st, and was a key driver of the blockchain rewards revenue growth. On the native unit front, we did see inflows into both custody and staking. USDC market cap grew 32% to close Q1 at over $32 billion. I'd also like to note that in Q1, we renamed interest income to interest and finance fee income, and we reclassified prime financing fees to this line, which was previously recorded in other subscription and services revenue. On the expense side, total expenses increased 5% sequentially to $877 million. And as we shared on our last call, the primary driver of quarter-over-quarter expense increase was higher stock-based compensation. All right, second topic. There are 2 items to note today. One, in the first quarter, we issued a convertible note. This was an opportunistic capital raise that raised $1.1 billion in net proceeds and added to our cash balance. We plan to use proceeds from that capital raise to repay our outstanding debt at or prior to maturity, depending on market prices. Second update, notable accounting change. We early adopted Accounting Standard 2023-08. As a result, we now account for all crypto assets that we hold on our platform at fair value, as compared to historically, where we accounted for these assets at cost less impairments. In Q1, since crypto asset prices were higher on March 31st as compared to December 31st, we recorded $737 million in pre-tax crypto asset mark-to-market gains. The majority of this was unrealized at quarter end, i.e. we had not sold the assets and realized this gain. You can see that in two new financial statement line items. First, $86 million in gains on crypto assets held for operations net and operating expense, which pertains to crypto held and used in our operations. Second, $650 million recorded in gains on crypto assets held for investments net, which is below the line and pertains to our long-term investment portfolio. We will be adding back gains or losses on the crypto investments to adjusted EBITDA, as we do not consider those assets to be part of our day-to-day operations. Last, I'd like to touch on our outlook. We shared in the letter that April transaction revenue was over $300 million, and that we anticipate subscription and services revenue to be in the range of $525 million to $600 million. This assumes crypto asset prices stay in the range we have seen year-to-date 2024. On the expense side, we expect technology and development and general and administrative expenses to increase sequentially to $660 to $710 million. This increase is primarily driven by higher variable expenses, notably customer support and certain infrastructure expenses related to higher trading volumes. I want to point out that on the customer support side, expenses typically lag revenue growth and trading volume growth, as it takes us time to ramp up the resources to meet higher volumes. Last item of note on the outlook. We are investing in additional sales and marketing expense and expect these to increase to $150 to $180 million. The primary driver in this growth is USDC rewards due to USDC on-platform growth. We ended Q1 with $5.5 billion in USDC on platform, nearly double compared to our Q4 ending balance. And therefore, the reward payouts on these incremental balances will increase in Q2. We are pleased to see this growth in USDC and our incentive programs driving the broader adoption of our platform.
So guidance for Q2 is pretty much in line to what they just delivered for Q1. 300 million of transaction revenue for April is exactly what I calculated. If you just 3x that means that it's about the same as this quarter, 900 million. So unless they start doing better, they've done better every quarter than the guidance that they've suggested in at least last few quarters. So what is different is they're expecting technology development and general admin to... Oh, never mind. I thought this was just tech. So general admin and tech right here together being about 600. That's keeping the costs the same, actually. I thought they were increasing it. Never mind. So guidance is great.
Thanks. So our second question is, have you done an analysis to determine the net revenue impact from the spot ETFs? Emily?
Sure. As Brian mentioned, the ETFs unlocked a flywheel of customer engagement across our Coinbase Prime product suite, and we were excited to see 40% of institutional clients engage with 3 or more products in Q1. We saw both direct and indirect revenue impacts from the ETFs. The direct impact is clear in our financials. We saw native unit inflows as the custodian for 8 of 11 issuers. This supported growth in our assets under custody of 69% quarter over quarter to $171 billion, as well as growth in our custodial fee revenue of 64% quarter over quarter to $32 million. We also saw strong growth in Prime Finance revenue, which contributed to interest and finance fee income being up 36% quarter over quarter. On an indirect basis, in addition to Coinbase Prime reaching all-time highs in trading volume and number of active clients, we saw elevated trading activity across the board in Q1. We saw broad-based consumer growth in Advanced and Simple, with consumer trading volume up 93% quarter over quarter, outperforming the U.S. spot market. We've long said that the
93%.
ETFs would benefit the entire ecosystem, and we're thrilled to see that play out on our platform.
All right, and the final question we'll take from Say is, does Coinbase plan to offer any other products in the near term, like banking or insurance products? Brian?
Yeah, so we're not planning to build anything in the banking or insurance space at the moment. We feel like we have plenty to do in the crypto space, and we want to really focus on how crypto rails can be used to update the global financial system and make things faster, cheaper, more global. And things in crypto tend to have a 100% reserve ratio. You'd only need a banking license if you wanted to kind of do fractional reserve or something like that, which we don't have any plans to do at the moment. We also try not to pre-announce anything on these calls. I kind of believe in let's not announce vaporware. Let's actually go build things. And if once they're live, we kind of announce them to everybody, including on these calls. But you can imagine that we're always looking at how we can provide more services for retail, insto, and also on our developer platform. There's all kinds of things that crypto is really enabling at this point. And with Base coming online, there'll be a lot of opportunities there. We're doing a lot of international expansion. We've got a whole on-chain economy to build. So, good ideas can come from anywhere within Coinbase. Even bottoms up. We've had groups come pitch us on ideas, and some of those have turned out to be the products that you see that are live today. So I suspect we will continue to do that and create a lot of innovative products over time.
All right, great. With that, Sarah, let's switch and take live questions from the analysts, please.
Thank you. Your first question comes from the line of Devin Ryan with Citizens JMP. Your line is open.
Hey, great. Thank you, everyone. First question, just want to follow up here on Base, and appreciate the growth there is not going to be linear. But as we think about the rollout of, I think, the smart wallets later this quarter, which I believe are on testnet now, it would seem that could represent a pretty material catalyst for both a step function of activity on Base and also USDC growth and adoption. So I'd love to just maybe get your expectations there, just based on the interest you're seeing around integration with smart wallets, and particularly as you're kind of thinking about taking a step deeper into connectivity with Web3. Thanks.
Yeah, sure, I can take that. So thanks for calling out the smart wallet. That's been a really exciting, innovative product that we're working on, and it's very early days, so we have to kind of caveat everything we say here. We don't know exactly what the impact will be, but one thing we've been always thinking about at Coinbase is how do we make these tools easier to use? And onboarding to crypto wallets has been a really big challenge in the past. You have to, sometimes there's a 12-word phrase and you have to save it in a safe spot or use some kind of Chrome extension. And, we always think about how do we get this to 1 billion people so they can benefit from the technology. Those kind of onboarding experiences are a little bit too technical for probably that size of an audience. So, with the smart wallet, we've been utilizing this kind of creation of the pass keys, which is an interesting technology in its own right. You may have seen it kind of if you've done a biometric, push your fingerprint in various scenarios and different kinds of apps. This is allowing us to onboard people into the crypto economy in a much faster, simpler, and actually more secure way where they're less likely to lose funds. So we have a developer preview out right now. It's only on testnet. We've got incredible developer interest in it. And that's a really exciting thing because all of that leads to basically more applications getting built. And it goes back to that analogy I mentioned where Base is, I think, kind of going to be like the internet moving from dial-up to broadband. If we can build better developer tools, we'll get more applications, and that's how we eventually get it to 1 billion people.
Okay, terrific color. Thank you. Just to follow up, obviously a big step up in USDC resources from 5.5 billion to 7 billion. I know you benefited from the convert, as you guys mentioned, but also strong cash generation in the business. So if we think about just the level of growth you're seeing right now and all the areas that you're focusing on and the areas that need capital to grow and support their businesses versus ones that don't, and how are you thinking about kind of the capital needs, I guess, of the business now, and where does that leave you just with what I would think is just kind of building capital for capacity to do other things like more aggressive M&A or even potentially return capital to shareholders? Just love an update there as well.
Thanks. I'll take this one. So we are plowing a fair amount of capital into our prime financing business. We ended the quarter with just over $700 million in loans, which the majority of them came from assets on our own balance sheet, whether that was fiat, USDC. We have a new footnote that discloses a lot of detail around that lending portfolio. So that business is using liquidity. I wouldn't say that it's using a lot of our capital today, but we are bridging that product as we grow and develop a two-sided marketplace for institutional lending. We also use capital for international expansion as we set up new licensed legal entities around the world. But overall, I would say we have a very capital efficient business where we have positive unit economics in our products and we don't require significant capital either in the form of CapEx or balance sheet to support them. So our balance sheet is intended to be bridge capital for a lot of these bootstrapping the products as well as opportunistic so that we can pursue M&A. And I'll pass it over to Emily to share what we're looking at on that front.
Sure. Well, we always look at a spectrum of buy, build, partner, invest activities. And so, for example, sometimes we'll see really interesting opportunities that are kind of further out for us that would be well suited for venture. Whereas if we have something on the product roadmap that we think is incredibly important to the future of Coinbase, we're going to probably build or buy that. And we have done historically very well with M&A to bolster the product portfolio. You can think of things like Tagomi and Zappo, for example, that helped us build our institutional product platform. Right now, we happen to be shipping very well organically. We launched in Canada, Brazil, Singapore. We have the international exchange. And so we're leaning a little bit more into our ventures arm, but we're watching M&A opportunities all the time. We closed Ordam in 2023. That's now Coinbase Asset Management. We are acquiring a MiFID license for the EU. We announced that in Q1. That should unlock derivatives in 20 plus EU markets. And we're just going to continue to use the strong balance sheet to drive growth where we see high quality opportunities.
Your next question comes from the line of Ken Worthington with JP Morgan. Your line is open.
Hi, good afternoon, and thanks for taking the question. So 1Q24 total revenue up 72%, 1Q24 total expenses up 5%. You know, that's amazing operating leverage. In your 2Q guidance suggests some higher costs, but still a very high level of profitability. How are you thinking about the right level of investment in the context of what is a good cryptocurrency environment, but acknowledging that you can't sort of turn on and turn off investments as quickly as revenue might move around? Is there sort of a logical margin range that in these better cryptocurrency conditions you feel is right over a longer time frame, balancing the need for future growth and current profitability?
Thanks, Ken, for your question. So I think it's important to note that our focus is on positive adjusted EBITDA, and our overarching goal is to generate positive adjusted EBITDA in all market conditions. You saw that in 2023, those adjusted EBITDA margins were in the 30%. Obviously, when we see strong crypto market conditions, we were able to deliver the Q1 performance that you see today in the 60% range. But the focus here is on learning the lessons from the past, and we learned in 2021 that we grew too quickly. So as we look at 2024, we are going to be making investments. We are planning to be prudent and modest to support the strong performance we've seen year to date, and especially some of the early traction that we're seeing, for example, in Base, in USDC, and some of these other products that are not as correlated with crypto market prices and volatility. For the outlook we provided for Q2, the majority of the increase, though, is coming from variable spend. As I noted in my comments, we see CX customer support and compliance operations typically lag trading volume. And so the spike that we saw in March, the expenses are really hitting in Q2. And then we also have some infra-related spend associated with scaling our infra to meet demand. So we are going to be prudent. We expect to see some modest headcount growth in Q2, but we plan to be able, in strong market conditions, to deliver to the bottom line.
Your next question comes from the line of Benjamin Budish with Barclays. Your line is open.
Hi, good evening. Thanks for taking the questions. Maybe just a couple of sort of model-related questions. First, on the payment-related revenues and the sequencer fees. On the payment side, could you talk a little bit more about what those are exactly? How should we think about, modeling them? What are the key drivers?
Sure. So it's a broad category for everything on the platform that is payments related. It includes instant withdrawal fees, debit card fees, commerce fees, and some of the more venture type products that we have in the portfolio that are payments related. So I would say that Base, as I mentioned earlier, has been the biggest contributor to growth quarter over quarter, and that is the largest of these revenue streams at this time, but the payment related are the ones that I named.
Got it. Helpful. And then just on the institutional client engagement, you talked about, I think 40% of institutions seeing engagement with 3+ products. Can you talk about where that is, and is it sort of you've got a client who started with trading and they add prime and borrowing and they're doing stuff with ETFs? Can you maybe unpack that a little bit? Anywhere you're seeing particularly strong traction, any particular types of products?
Sure, happy to. So I think it's really important to kind of zoom back and look at the last bull run where our institutional offering in 2021 was really limited to like the custody platform. And over the last few years, we've built out a full prime suite. And so the prime suite offers custody, trading to the prime brokerage product. It offers financing now. We have staking. And so we're seeing customers engage across that product spectrum. I would say custody, trading go hand in hand. And then you see, depending on the type of client, whether they lead financing business or whether they're in staking, tends to be a mix depending on the types of clients. But we're seeing good adoption across each of those, which has led to the growth that you saw in the quarter.
Your next question comes from the line of Owen Lau with Oppenheimer. Your line is open.
Yeah, thank you for taking my question. Could you please add more color on your strategy for Lightning Network and payment? What is the traction on encouraging more merchants to use Lightning Network, and what are the major pushback from them? Thank you.
Yeah, I can take that one. So as I mentioned in the opening remarks, one of our goals is to drive down the cost and the confirmation times of all payments in crypto, really all transactions in crypto, I should say. And Bitcoin is the largest network out there. And so Lightning was a big effort that we went on in partnership with Lightspark, by the way, to enable the Lightning Network on Coinbase. So this actually decreased the transaction times by over 99%. They essentially became instant on the Lightning Network versus roughly a 10-minute block confirmation time on the Bitcoin layer 1. And it also lowered fees down, about less than 0.1% from the previous fees. So this was a huge step toward getting to that sub 1 second, 1 cent. If we can do that across all the major chains and sort of make layer 2, like Lightning Network, a default within our apps and products.
All right, so why is it not pumping given that just crushed it? Stock is actually down in the after hours, which makes no freaking sense. I've had this happen before. But not like this. Not like this when the news is this good for it not to pump. So either this was all priced in, which it wasn't. They were expecting 50 cents of earnings per share. They delivered 3 times that, 165. And guidance is actually really strong. That was the biggest risk for us, was that they would guide much lower than this quarter. They're pretty much saying next quarter is going to be just like this, which is what they've done the past 2 quarters. And consistently, they have beaten that expectation by like 40%, right? So we saw, I think, a 40% jump in revenue. It was, 60%, because it was about $1 billion last quarter, and now it's 1.6. So that's huge, right? So if they continue to grow like this, eventually the market will catch up. So it might take investors a day or two to digest this news, and then I expect the price to go well past at least 250, 280. That's the options I bought, but I would not be surprised to see it breach 300 in next couple of weeks. So why it's not going up right now, who knows? People might be taking profits that bought it earlier. Could be Kathy Wood at ARK is selling because she loves to sell when there's good news for no reason. I'm going to hold on. I actually bought more today at 220. So I'm holding. I think it's going to go up more. Yeah. So I think a lot of you are asking in the chat, why is it not pumping? Why is it not going up? So that's why. Just give the market time. They have to read the financials. They have to extrapolate, put in their models, and then perhaps tomorrow or next week we'll see a big bump. Hopefully. Yeah, if you're a believer in the company, don't let the small price fluctuations bother you. That's just noise. This company is delivering on all fronts. They're firing on all cylinders. They're producing more value for shareholders. They're constantly launching new products. So even if you can see right here, they're saying the trailing 12 months earnings per share was 38 cents. It's going to be $1, maybe $4 by the end of the year. So this is great. Yeah, only risk for me is in the next 2 weeks if the price doesn't go up past 280, then my options will be worthless and I can't buy that Tesla. If you followed along, I bet between $6,000 to $8,000 on options based on this earnings and my forecast, and I want to buy a Tesla that's between 35 and 40 grand. So the experiment of betting on my forecast, and you never know, the market, you can be absolutely right and the market can go against you. So that's the nature of investing. Let's go back to the earnings call.
In the quarter, and I think that perhaps, maybe underlying Bitcoin spot trading was kind of, I guess, not mentioned as much in the press. Just wondering if you've got a feel kind of where, if perhaps there was like a multiplier effect in the ETFs driving more Bitcoin trading. Obviously, it was other color you'd have there as kind of a guiding metric relative to ETF activity. Thank you.
I can take it if you want. I mean, yeah, look, I think the ETFs got a lot of attention, but what we're seeing is that when there's attention on crypto in general, I think it creates energy and interest across all kinds of products in the industry. So, we mentioned in the opening comments that this excitement around Bitcoin ETFs actually drove new customer adoption across our product suite. And we saw all-time highs in trading volume and active clients, for instance, in our institutional business. So, I think it's a rising tide that lifts all boats.
Your next question comes from the line of Bo Pei with U.S. Tiger Securities. Your line is open.
Hi, management. Thanks for taking my questions and congrats on the strong results. I have 2 questions, if I may. So, what is your view on the recent Wells notice received by Uniswap Lab? Do you think this will potentially impact the U.S. crypto industry and ultimately make crypto less accessible to U.S. users? And second question, also on regulatory front, it seems that the U.S. SEC wants to classify Ether as a security. If Ether is classified as a secured security in the U.S., how does that impact Coinbase trading service and staking business? Does that mean Coinbase had to stop offering trading for Ether and other cryptocurrencies classified as securities? Thank you.
This is Paul Graywall. I'm happy to address each of those questions. On the Uniswap Wells notice, I think it's noteworthy that Uniswap responded publicly, transparently, and made very clear their view that none of the claims that have been suggested or presented to them have any merit whatsoever. I do think that is reflective of an emerging trend, not just in this industry, but more generally, of companies taking their disagreements with the SEC publicly, always in a respectful tone, always in a constructive manner, but sharing with the wider public and certainly the wider market why they believe their products and services are consistent with federal securities laws and why they ultimately will prevail in the action that the SEC may bring. As for the ETH issue that has been presented in the consensus declaratory judgment action that was recently filed, what I think consensus has done in that particular case is, again, in a very transparent, productive, constructive manner, laid bare an issue that has been somewhat confused if you look at SEC statements and the positions of the Commission over the last several years. The SEC has made very clear in the past that ETH is not a security. In fact, not only was that the position of senior officials at the SEC, the current chair of the SEC said that same exact thing prior to his appointment in the years that followed. So we're fully supportive of both Uniswap and Consensus in their view. The court process, of course, will have to play out, but we're confident that, as Brian has always emphasized, one way or the other through these court processes, we're going to get clarity for the market and certainly for Coinbase that unfortunately the SEC has not been willing to provide in its own right.
Your next question comes from the line of Mike Colonnese with HCW. Your line is open.
Hi, good afternoon, guys. Thank you for taking my questions and really great quarter here. So my question is around USDC. So the market cap has grown by over 8 billion since the start of the year. What do you consider the primary driver supporting this rebound, and how are you thinking about growth over the coming quarters? And then as a quick follow-up to that, I saw that you mentioned in your shareholder letter that you've seen a step change from legislators in recent months. So I know these things are difficult at time, but when can we reasonably expect to see stablecoin legislation passed in the U.S., and what would be the potential impacts for USDC? Thanks.
Why don't I take the first part, and then Paul, I'll hand it over to you for the second part. So we're really pleased to see the broader USDC growth. As we mentioned, we saw USDC growth on our own platform, where our own on-platform balance nearly doubled in the quarter, and we also saw growth in the overall ecosystem. I think there's been recognition that USDC is a highly trusted, transparent stablecoin by many market participants, and that has been leading to broader adoption, largely through efforts of ourselves and other market participants. So we'll continue to offer incentives. We'll continue to work with the global ecosystem to make it an adopted product. And Paul, maybe you can offer comments on.
Sure, on the legislation. Look, we're pleased and encouraged that Congress is paying attention to this important issue, and there are now a number of proposals for legislation that are working their way through the Congress. While certain proposals I think could and ultimately will be improved, the fact that we're seeing Congress engage, I think, is the important thing. Coinbase has been pushing for sensible legislation as to stablecoins for some time. We think it is an important complement of or to regulation that we've been pushing for before the SEC and elsewhere. So regardless of sort of when any such legislation might pass, it's always difficult to predict how quickly Congress can be able to engage and muster the necessary support in order to move this from mere legislation that's proposed to legislation that's enacted. We're encouraged by the fact that it does seem to be a priority. And we do expect to see legislation ultimately enacted that will enshrine standards for transparency, standards for reserves, and other important requirements around stablecoins that we think will continue to make the U.S. an attractive market.
Your next question comes from the line of John Todaro with Needham & Company. Your line is open.
Great. Thanks for taking my question. Congrats on the quarter. Good results here. I guess I have two here. One, on the 300 million outlook for the April transaction revenue, does that include the other transaction revenue base? And if so, how much is that? And then second, management's talked a lot about managing through the cycle here. No, you guys spent a lot of time thinking about that. So just kind of curious your thoughts on maybe where we are in the crypto cycle or any kind of thoughts you put around that.
So I'll answer the first part. The answer is yes. 300 million is the April total transaction revenue, which includes both consumer, institutional, and other. And we haven't broken out the detail at this time to share with you. With regards to where we are in the cycle, it's one of our favorite questions, Brian. Do you want to take the first shot at that?
Yeah, sure. So, look, I'll leave the predictions to you all investors out there. We just mostly want to focus on building great products and tools and everything like that. But I can share just a few thoughts with you from past cycles and things that we've observed. So the crypto market cap's up about 60% in Q1, and the volatility though is still below 2021 levels. So a couple of things have happened. Obviously, that we had the ETFs in Bitcoin. There's possibility for other ETFs in Ethereum and things like that down the road in the future. We had the Bitcoin halving as well, which kind of reduces the amount of supply being introduced into the market. Every block really that's mined in Bitcoin. And so, if you have the same amount of inflows, but half as much supply being generated every day, then, you can imagine what that does. And so people anticipated that, and people, speculate around those. But, an interesting way to look at it is kind of in past cycles, what happens post halvings. And historically, it's taken about 12 to 18 months for Bitcoin to peak after halvings. So, who knows if that will happen again, but it's just an interesting data point. So those are all kind of the things that we think about. And I actually think layer 2 is probably the biggest piece that's coming down the pipe next. We talked about Base, getting those transaction fees under 1 second and 1 cent. It not only is it really interesting for global payments, but it's interesting for lots of different applications that can be built on blockchains. In past cycles, people started building things like DeFi and NFTs. These are things which you might periodically do a transaction, and you're okay paying kind of a higher fee for that, because how often are you going to do a trade or a purchase, and maybe the fee is $5, $10, $25 or whatever. For other types of applications, like if you want to make a decentralized social network and every upvote or like button is happening on chain, or you're in some sort of a game, or something that's more of a daily, hourly, by the minute use case, the costs and confirmation times have to come way down. And that's what we're seeing now with layer 2. So that's really hard to predict exactly what's going to happen, but I think it's pretty exciting.
We have one more question in the queue. It comes from the line of Pete Christensen with Citi. Your line is open.
Good evening. Thanks for the question, and congrats on the great results here. I'm curious. So press reports are indicating potentially that Loomis Gillibrand could hit the floor at some point next week. And part of that bill, as you likely probably know, is the dual banking system debate, and whether or not states can issue their own stable coins independently of the government, the federal government. I'm just curious how you see state-issued stable coins kind of playing in the market. Is that potentially an opportunity for Coinbase? I'm just curious if your thoughts around that dynamic. Thank you so much.
I'm happy to take that one. I think the point that you're raising around the role of state governments, and in particular state chartered institutions in supporting the crypto ecosystem, and in particular stablecoins, is an important one. Whether that ultimately comes to pass in any final legislation that's enacted remains to be seen. But we do think it's very important that states continue to have an important role in supporting stablecoins and supporting crypto more generally. We do think the dual system serves consumer and investor interests reasonably well. And we're hopeful and confident that in any legislation that's finally passed, that will continue to be recognized.
I want you guys to do some homework and take a look at companies that produce this much net income for their shareholders. What is their market cap? What is the value of those companies? This is huge, right? This is just one quarter. So extrapolate this, 4x at least for the rest of the year. Again, crypto bull market hasn't started, as Brian mentioned. It takes, about 12 to 18 months for the Bitcoin prices to peak after the halving. So we're just starting the bull cycle, really. So let's conservatively say maybe next quarter will be like this, but the Q3 and Q4 might be even better. A company that delivers, that much revenue, that much net income should be worth a lot more than Coinbase is worth right now, just in fundamental analysis. So do some homework, take a look at companies that make this much money for their shareholders. How much are they worth? And at the pace they're growing. This is actually wrong. This is a 60% quarter over quarter. Maybe 66. That's it. That's the end of the Coinbase earnings call. I will take some questions now from the chat if you guys have any. This is the results right here. More or less. I did this as fast as I can after reading the shareholders letter. I will do a detailed follow-up video after I get a chance to really dissect the earnings report. All right, I'll stay on for another few minutes, just see if there's any questions. And then I'll get to strategizing how to what to do tomorrow. I'm not selling anything. I expect the true value of this company to be realized by Wall Street sooner or later. Yeah. Video I did yesterday, I think. I discussed the Fed communications. Yeah, huge. Of course, Fed moves markets. I worked for a company that all they did was advise hedge funds and investment banks on the monetary policy. So every serious investor out there pays attention to monetary policy. So yes, of course. See if we can do a half and half over here. Boom. Yeah. Yeah. Robinhood is, yeah, I'm calling them out. First of all, I just posted this on Twitter, is they said it was 50 cents expected, right? And then they go and they update it after the earnings and say, oh, it was expected 98 cents. So I don't know. Robinhood is pure bullshit. I don't like that app. I look at it because it's fast sometimes, but also it's like where all the plebs go. So yeah, Robinhood is pure garbage. I actually put their earnings per share in here. So like, yeah, I should, let's delete that. I haven't even looked at all the numbers yet. Yeah, so does the Fed have effect on the economy? Yeah, interest rates are very important. It moves the stock market, it moves everything. Like if interest rates went down 1%, there'd be so much activity in the housing market, for example, all these people waiting to buy houses. Companies would refinance if they have a lot of debt. They would refinance to lower their payments, monthly payments. So yeah, if everybody's paying less interest, that means there's more money to go around. Also, people borrow more money, and it just multiplies everything. So if inflation goes down, then we may see interest rates go down as well. But looking at communication from yesterday, the Federal Reserve is saying, we're looking at data, it's going down, but not at the pace we want it, and it's potentially might even go up. And a lot of things can make inflation go up. A war in the Middle East makes oil prices go up. That's an input in everything. Yeah. Any other questions on crypto or Coinbase specifically? Yeah, U.S. economy as well. Monetary policy. I am a macroeconomist, and monetary policy is my expertise. So if that's something you're interested in. Let us look at the shareholders letter. Boom, 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 boom. Oh yeah. John Shadow asks, do I think this is a $500 company? I think this is, let's see. Right now, market cap is 56 billion. 56 billion. I think this is a $1 trillion company. So you do the math of how much that would be per share. Eventually, this will be a $1 trillion company. And I'm going to hold my shares until that happens. ARB versus Base, which ecosystem is worth diving into? So Base, by owning Coinbase stock, you are getting the benefits of Base blockchain. And that's right here, this $56 million per quarter. As a shareholder, you get that revenue. Arbitrum is a governance token, and currently there's no way of revenue sharing. I do suspect that in the future, all these governance tokens that produce revenue will do a vote to share their revenue, but only Uniswap has done that so far, and hopefully ARB will too. Yeah, Arbitrum is valued pretty high. It's, I think, fully diluted right now. It's about $10 billion. It's like $1 per coin. And let's see. Where's ARB? Oh yeah, it should be like 2. Yeah. So it's number 40 right now. It's 2.7 billion. So it's, yeah, it's 2.7 billion, but there's 10 billion ARB tokens. And so its fully diluted value is 10 billion when all these tokens are released. So arguably Base should be worth that much. So add that on to the market cap right here. Just add another 10. What is that? Another 15% to the value of the shares. Let's see, has this moved more? No, this is where it's at right now, 2222. I don't expect this to stay like this for very long. You see, like, this is before the earnings, and then like people took profit. Which broker do I use for options? Literally all US brokers have options that I use. And honestly, you can use even Robinhood if you want. It's not bad. Only thing is Robinhood prices sometimes suck. Like, do not do a market order, put a limit order. And if you go on like Fidelity, or if you even go on Yahoo, you can check what the like market price is. And you can get a better one. I prefer Fidelity or Schwab because they'll give you a better price. Even if you put like a higher limit order and they can fill it for something less, they won't pocket the difference. They'll give you the best price after their fee. Where Robinhood, if you put like something costs, let's say you want to get it for $5 and you put a limit order for $5, but actually price is $4.80, they're just going to sell it to you for $5 and pocket the 20, cents or whatever. PE right now, let's see. 416, 16. It's still probably pretty high. Let's see. They're just gonna sell it to you for $5 and pocket the 20, cents or whatever. Let's see. If we do maybe that. Yeah, I mean, P is probably not that bad. It's yeah, it's reasonable for a company that's growing this fast. I'll have to calculate it later. It's probably around 20, if earnings are 4, maybe between 10 to 40, depending how we look at it and what we expect for the next three quarters. Yeah, $500 stock in 2 or 3 years. Yeah, I think it's totally possible, depending how much they dilute with the other shares. All right, options. All right, thank you for tuning in. That was the earnings call for Coinbase Q1. My forecast was on point. I expected 1.6. If you followed along, they delivered 1.6. I did not see the gain from crypto being included, so this is a great bump to the net income, better than expected. And they also did about 130 more million of tax benefits than I expected. Everything else is in line, more or less, as they guided for expenses. New item we see here is other transactions, which is base layer 2, about 56 million. This is the fastest growing L2 on Ethereum. Other thing that we've noticed is subs are 63, Coinbase 1. I think this is possibly seasonably adjusted because people do their taxes. So I know I subscribe to that when I use Coinbase for taxes, maybe one-off, because otherwise I don't see a lot of benefits. But they did start refunding fees on advanced trading. A quarter of the fees, I think. Stable coins, this is 200 million. This is because USDC has issued more stable coins. I thought this was the top of my range. I had it much lower. I think I had it 175 in my forecast. Yeah. So this was what I thought could be the top in my conservative measure. Custodial fees, I actually had it higher here. Custodial at 60 because I thought that ETFs would be worth more, but this is still a 50% bump. So custodial fees being 32 million, it was 20 before, so that's a 50% increase quarter over quarter. So that's still great. So yeah, that's it. I bid you adieu, and as always,